Zomato has just acquired Paytm's entertainment ticketing business for 2,048 crore rupees. That's $244 million. But what exactly does Zomato get out of this acquisition? Well, they're going to gain access to Paytm's two businesses, Paytm Insider and TicketNew, that brought in 297 crore rupees in revenue in FY24. Now, at first glance, this deal might not make a lot of sense. Why would Zomato pay so much money for a business that doesn't really have anything to do with food delivery? But the reality is that Zomato isn't just about food anymore. For example, they entered the quick commerce and grocery delivery space with the acquisition of Blinkit in 2022, and also they've actually been in the ticketing business for over a year now. See this going out section in Zomato's annual report? Well, this section includes Zomato's dine out as well as their ticketing business, and in FY24, this part of their business generated 258 crore rupees for the company. And Deepinder Goyal actually sees going out experiences as the next big thing in India's lifestyle shift. So instead of cramming everything into the Zomato app, they're launching a new app called District to house these experiences. And you can think of District as the go-to spot for all things going out, whether it's dining out, catching a movie, or planning a staycation. This strategy is similar to how Zomato transformed Blinkit from a next-day grocery delivery service into a quick commerce powerhouse. And so with District, Zomato aims to create a super brand that covers all aspects of going out entertainment and experiences, potentially challenging BookMyShow, the current ticketing leader, which clocked in 1,050 crore rupees in revenue in FY24. Zomato is betting big on this, expecting this going out business to hit 10,000 crore rupees in gross order value by FY26, and the strategy of building super brands instead of super apps seems to be working for the company, at least for the time being. Zomato is already the biggest food delivery player in India. Blinkit is a leader in the quick commerce segment. So do you think that Zomato's District could be the biggest player in the going out segment? Leave a comment down below. And also, by the way, we're going to be discussing Zomato's latest acquisition and their plans to launch their going out app District in much more detail during our live stream, which is scheduled for noon today itself on Saturday. So by the time you're watching this news video, in less than an hour, or possibly even now as you're watching the video, we might be live streaming. It's going to be me, Pankaj, and Prithvi, the three co-founders of Backstage with Millionaires. And if you have any questions for us, you can bring those too, because we'll be putting a small Q&A session at the end of the live stream. All right, now let's move on to the next news item here. The Reserve Bank of India has put a stop to the immediate withdrawal options offered by some P2P lending platforms in India. Now, if you're wondering what this means, let me break it down for you. So back in 2017, the RBI introduced guidelines allowing companies to offer peer-to-peer lending through special licenses called peer-to-peer NBFCs. And simply put, peer-to-peer lending lets you borrow money directly from another person instead of a bank, like borrowing from a friend, but with interest. The first company to get a license for this was Faircent in 2018, and since then, the industry has grown to over 20,000 crore rupees, with 26 platforms now operating in this space. And these platforms are supposed to just connect borrowers and lenders, with lenders bearing the risk if the borrower couldn't pay them back. And because of these unsecured loans, the risks are pretty high. And here's where things get interesting. A LiveMint report from 2023 showed that many of these platforms were reporting very low or even zero non-performing assets, NPAs, which seemed too good to be true. Well, it turns out that these platforms were charging borrowers up to 24% interest while offering lenders anywhere between 9 and 12% interest and pocketing the difference, called spread. They use this spread to cover any defaults and allow lenders to withdraw their money early by transferring loans to new investors. And this made peer-to-peer lending seem much less risky than it actually was. But now the RBI has stepped in and banned these practices, stating that peer-to-peer platforms must act solely as intermediaries without transferring loans between investors. This has caused a lot of uncertainty in the industry, and some platforms like India Peer-to-Peer have actually paused withdrawals and new investments, while an association of peer-to-peer lending platforms is planning to meet with the RBI to seek clarification on some of these new rules. And even Cred and BharatPe have partnered with peer-to-peer lending platforms like Liquid Loans and Lend Club to offer their own peer-to-peer lending products, Cred Mint and the 12% Club, which might be affected as well. All right, next up in the news, Indian fintech company MobiKwik has posted its first profitable year in 15 years, shifting from a loss of 80.6 crore rupees in FY23 to a profit of 14 crore rupees in FY24. And they also grew their revenue from 561 crore rupees in FY23 to 890 crore rupees in FY24. But how did they achieve this? Well, in an interview, co-founder Upasana Thakur mentioned that reducing their fixed costs from 50% to 39% of revenue played a significant role in their profitability, and she also highlighted their strategy of innovating and building for Bharat in a LinkedIn post. And looking into their DRHP, which they filed in January of 2024, it's evident that while MobiKwik didn't dominate in Tier 1 or Tier 2 cities, 74% of their personal loans were dispersed in Tier 3 cities, and their focus on Tier 3 markets has been a key in their growth as well. They've also kept their employee cost to revenue ratio at just 0.18, which means that MobiKwik spends only 18 paise for every rupee earned, making their operations much more efficient compared to giants like Paytm and PhonePe with ratios of 0.45 and 0.91 respectively. And all of this could bode very well for MobiKwik as they're waiting for their IPO approval and preparing to go public. All right, next up in the news, Aviral Bhatnagar, previously an investor at Venture Highway, has launched his own 100 crore rupee fund, AJVC, to support pre-seed stage startups. And some of you might know Aviral from his blog, A Junior VC, where he's been writing since 2018. And in this announcement, Aviral shared that he secured significant commitments from the fund on launch day, with many backers being longtime readers of his blog. The AJVC fund is now open for applications, and if you're a pre-seed stage startup founder looking to raise funds, this might actually be interesting for you because the fund promises to give founders a yes or no reply within 48 hours of applying. Aviral also shared on LinkedIn that they hit their 12-month target of 1,000 startup applications in just 2 days, highlighting the strong demand in this market. Now, apart from AJVC, Ahmedabad-based micro VC firm Volt VC is planning on raising their first fund of 45 crore rupees, and they're planning to raise this over the next 3 to 4 months. They want to invest this capital into 20 to 25 pre-seed consumer-centric startups. And then finally, in the venture capital news this week, we have a nearly 2-decade-old VC firm, Chirate Ventures, and they've launched the 3rd cohort of their flagship seed investment program, Chirate Sonic. Now, just like AJVC, Chirate Ventures is promising a 40-hour time period turnaround for seed investments ranging from $500,000 to $2 million. And while the program is open for companies from all sectors, the firm does have a particular interest in startups from deep tech, generative AI, climate tech, and manufacturing tech companies. All right, now let's move to the funding news segment for today's video. This week, Indian startups raised a total of $182 million, which is higher than last week, but still below the trend line, which means that this is the 3rd consecutive week of funding that's been below average. But now let's take a look at some of the companies that have raised funds this week. The first one I want to talk about is Bengaluru-based D2C jewelry brand Bluestone, and they've raised $107 million in what very well might be their pre-IPO round, as the company is expected to file for their IPO sometime this year. After that, we have Mangaluru-based ice cream brand Hangyo, and they raised $25 million. And then following that, we have Bengaluru-based Even Healthcare, which lets you access primary and preventative healthcare services at any of their 100 hospital partners for a monthly subscription, kind of like an insurance provider, and they've raised $20 million. And then after that, we have Bengaluru-based AI-powered equity investment platform Investor AI. They've created different baskets of stocks, kind of like Small Case, but based on their own AI models for retail investors to invest in, and they've raised $10 million in their Series A round. Next, we have Mumbai-based D2C luggage brand Uppercase, and they've raised $9 million in their Series B round. And then after that, we have Raipur-based D2C spices brand Zoff, which you might remember from Shark Tank India Season 2, and they've raised $4.8 million in their Series A round. And then finally, we have Mumbai-based fintech startup Transbank, which helps banks and other fintech companies build lending and payment solutions using their API infrastructure, and they've raised $4 million in their Series A round. Now, before I let you guys go, just a quick reminder that we do have that live stream at noon today. It's going to be for an hour, so if it's already 1 p.m. India Standard Time or later, the live stream is probably over, unfortunately. But don't worry, the video will still be available for you to watch in case you want to catch up on what we talked about. And also, we're going to be doing these live streams probably every Saturday at noon for the foreseeable future. So I look forward to seeing you in another live stream if you can't make it to this one. All right, thanks so much for watching, and I'll catch you in the next one.